We've been talking about simple planning of trades for common stock. Let's talk about planning an options trade, okay? So somebody just go ahead and throw out a stock they're looking for options in. Actually, I'm going to do one. I'm going to do INTC just because it's one of our focus group charts and there's some people trading it. So, what ways could we start? Now, let's assume we're back a week ago. Okay, we're back here when the bounce was made, when people got into this. And let's talk about the ways that we could plan a trade on this. Yes, Jonathan put call charts, but I don't use them because they don't always coincide with the stock I'm trading against. Put call charts are probably halfway decent, maybe for scalp trading, but not for this. So let's assume we're down here where this morning star pattern was created. And we said, okay, we were waiting for a time to enter, and we were looking for a bounce higher than that, right? That's really all we wanted, a bounce higher than that. How could we look to plan how long of a trade we wanted to make? And we'll get to that when I actually get to that type of trade. But what's the first thing we could look at to determine how long of a trade we wanted to make? Here, let me tell you how I would do it. Let me tell you how I would do it. Man, INTC's fallen a long way. It's making higher highs, higher lows over the past year. This could be a good long-term trade. And I come over here and go, it's a microchip. Intel, it's, manufacturing, PC chips, stuff. Crap, I'm already in CY. So is it going to be a long-term investment? If it is, I got to sell some of my CY. If INTC is going to be a long-term investment, I've got to sell half my CY, or else I'm not properly diversified. Because, hey, I could put the CY chart right over top of this. Looks pretty similar, doesn't it? Do you know why? Same sector, they go up and down together, and they always will. So with E-Trade, it's just the symbol 2 block right to the right side. Ryan, that was my fundamental research. The belief of potential in the company, many other things. INTC released a statement that they believe 2014 is going to be a flat year in comparison with 2013 as far as their fundamentals go. What should that tell you? That you're probably going to be in the same price range, right? But that doesn't mean you won't go up and down around that price range. Where CY's guidance is to be estimated to be better next year, so the stock should do better. Very simple. But I've already identified that INTC won't be a long-term trade for me. Do I want to scalp trade INTC? Probably not. I mean, I've looked at options. Rarely are there even weeklies available, and the only time it is a weekly is when it just happens to be a monthly that's in the expiration week, and typically it's not going to be very successful for you. So that leaves me with what type of trading to do on INTC. Swing trade it. So how do I determine a good expiration? What's an easy way to determine an expiration date? Yep. This is the easiest thing you can do. Let's see. From when this bottom, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Okay. From this bottom area, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. And I probably would have just ignored that because, by the time it came off bottom, it's still 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 2 weeks. Okay, time this comes off bottom, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15, 16, 17, 18, 19, and that gets me to another top. So I'm at about 2 to 3 weeks, right? When does time decay become a big factor in an options trade? I mean, when does it really, really increase and become very, very noticeable? Typically the last 2 weeks. So if I need 3 weeks to catch a run, and I need 2 weeks before time decay really starts killing me, what do I need? How many weeks do I need minimum for my strike? Or my expiration, I mean. Yeah, 5, minimum. Okay, so what do we got? What monthly? And remember, when I swing, I only go monthlies. I don't go all the little weeklies in between. Which monthly was within 5 weeks of that email I sent out? March 22nd, right? About a week and a half ago. Gave Brian A. some credit for bringing something to my attention. Sent it out to the focus group. March 22nd. $25 calls. Where did I get $25? How did I pick that as a strike? Anybody know? Was this high or was this low significantly higher than this one? If you look at it, the closes were actually the same, weren't they? Or almost the same. And this couple days that ran up here, that was that manipulation into the earnings, by the way. And because I follow this stock and I research the stock, I knew that. So the first thing I wanted to do is use a trading tool that I know and trust. And I ignored this high and picked this high. And I wanted to find a strike that would come in the money within the expected move. So that would be no higher than a $26 call, right? But do I really want to be at the money right when my time decay is starting to kick my butt? No. So I played a strike that would give me half the move and would be in the money on the latter half of the trade. Pretty simple, right? Now, there are more scientific ways to tell you how to pick your strike price. And I will gladly share those with you. You could do it by mathematically calculating a standard deviation, whereas one standard deviation is equal to the stock price times volatility, which is a factor you can find with your broker, times the square root of days until expiration divided by 365. Now, you're welcome to do the research on this particular INTC example, but it would have told you to play a $25.12 strike. Can you play a $25.12 strike? And was my way a lot quicker to help you calculate it? There you go. Keep it simple. Keep it simple. Don't overcomplicate things. So now let's look at this trade in another way. This was a focus group trade, so we just looked at doing the one buy with one sell goal. But let's say we were using Fibonacci extensions, and I've got a video lesson on Fibonacci extensions, and you guys feel free to go watch my whole Fibonacci series. What are these lines on my chart besides lines on my chart? A line below the current price would be called what? There you go, the support and resistance. A line below the current price would be the support. A line above would be the resistance. With Fibonacci extensions, it is a measure of move replication. So your target would be given by the 100% value. But let's say that I wanted to scale into this trade. How could I scale into it? You know, I could make my first buy on that morning star pattern because, hey, I like morning star patterns. High probability trade pattern right there. Little 3 candle pattern High probability reversal pattern. Not high probability that you won't see a lower price. Very high probability that it won't go lower than the low of the Morningstar. But let's think about it. If I make first buy in this area, I can make second buy here, and third buy here. I've averaged up, so even if I stop out on a fall below here, my average shouldn't be right here, should it? If I bought down here, and I buy again here, my average is probably right about here, isn't it? Therefore, it's probably easy to assume that if it were to close below this line, and I stopped out, I would still do what? Profit. Would I profit as much stopping out as I would hitting my target? So do you know how I like to do that? Yep. I buy in thirds, I sell in halves. I make a buy, I make a buy, I make a buy. Oh crap, it failed. I sell half of it. What happens if the next day it comes back up above this line? I make a 1/3 buy. That's how. There's been times where I've had 7, 9 buys on a 3-buy trade plan, because I've also had sells. And then what does that have me doing? For all of you that can't hold something for 15 minutes because you don't have enough patience. What does it have me doing? I'm always buying and selling stuff. Right? I'm always buying and selling. But yet I'm never out of the trade until I really don't like the trade anymore. And I'm always in the trade, though I may be reduced. For those of you that go, well, what if it goes higher? Well, I'm still in it. But if I sell some now and it goes higher, I'll make less money then. Yes, but if it goes down, you'll make some money now. And realized gains are what matters. I've had lots of unrealized gains that have turned into realized losses. But using a very, very simple trade tool can assist you in scaling in. Maybe you don't like Fibonacci extensions. It's a 3-point tool. You go to something like a Fibonacci retracement. Well, the first thing I got to gauge is from the highest open to the lowest close. And I might make a small buy here and be waiting, because until it passes the 50% line, it could just be what? What would we call that? That type of bounce move? A dead cat bounce. Would it make sense for a stock that just had an earnings miss and lowered their guidance for the coming year to just even from their current year to maybe only make a dead cat bounce? And would that be too far-fetched to believe could happen? would I even make a small buy down here? Just in case it's more than a dead cat bounce. And I buy more when I confirm it's no longer a dead cat bounce. Right? Real simple. This stuff's very easy if you will let it be easy. So have I lost anybody yet?